Hey, good morning, everybody. Today is Monday, July 6th, 2015. My name is Cliff Backus, and this is your daily video market review. Stocks meandered in tepid volume Thursday. Indexes closed well off their daily lows, but down for the most part. For the holiday-shortened week, the Nasdaq lost 1.4% and the S&P 500 1.2%. Advancing issues narrowly bettered decliners Thursday. The New York Stock Exchange advanced decline line continues to look bearish. New lows bettered new highs by about a 9 to 5 margin. Our market timing model is showing a don't buy signal on both the S&P 500 and the Nasdaq Composite. A don't buy signal means we should reevaluate our stop levels and immediately get off margin. The O'Neill market model is indicating an uptrend under pressure. Our distribution count is high, but less elevated than last week, as several distribution days have fallen off due to age. Large caps bettered small caps for the first time since June 19th, but small caps continue to outperform on a 10-day moving average basis. The small cap Russell 2000 and the S&P 600 continue to outperform the larger cap indexes, giving some encouragement to the bulls, but both have undercut areas of recent support. Our swing timing model is indicating an extremely oversold condition in the market, and the put-call ratio, which is showing bearish puts outnumbering bullish calls by a little bit better than 1 to 1. This contrary indicator is showing an excess of bearishness in the market, which, in the sick and twisted way of the markets, generally indicates an imminent market bottom. Caution's advised here. The don't buy signal on the market is an indication that we may have more work to do to the downside, but the extremely oversold condition means that we may see a short-term bounce. What we're looking at here is a list of Moody's 177 industry groups sorted in HGSI, High Growth Stock Investors, by 5-day percentage price change. The reason we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we do here, is that we need to identify where the power is and get out in front of it. So let's see where the strength in the market is today. Home and office products on Thursday had been up 9.3% for the most recent 5 days. Courier services 6.4%, mining services 6.2%, office supplies 3.6%, and material handling machinery up 2.5%. Let's take a look at the Russell 2000. Russell 2000 on Thursday was down 8.14 points or 0.65%. Note how the Russell has undercut this short-term uptrend and is now in kind of a neutral trend. We've also undercut our 50-day moving average, which we show in red. Right now the Russell has support down here in the 1252 area and has resistance up here in the 1279 range. Let's take a look at the Nasdaq Composite. On Thursday, the Nasdaq was down 3.91 points or 0.08%. Closed at 5,009. Trading volume was very low, as Thursday was a pre-holiday trading session and most traders had already headed for the Hamptons. For you followers of William O'Neill, the Nasdaq Composite is showing an uptrend under pressure. We have 4 distribution days in the past month. The Nasdaq is bracketed by support down here in the 48.47 area and resistance up here in the 51.20 range. We are on a don't buy signal on the Nasdaq Composite, which indicates that traders should be off of margin, should reevaluate their stops, shouldn't be buying new positions at this point, and should be letting existing positions go as stops are triggered. Let's take a look at the S&P 500. S&P on Thursday was up 0.64 points or 0.03%. It closed at 2,076. Trading volume was well below normal. And we are in an uptrend under pressure. We have about 4 or 5 distribution days. We have 5 distribution days in the past month. And the S&P is bracketed by support down here in the 2040 area and resistance up here in the 2134 range. The NASDAQ undercut this downward trend line last week, and I would expect that that area will actually serve as the next area of resistance for the S&P. The S&P is struggling with support resistance down here in the 2072 area. We are on a don't buy signal on the S&P 500. Let's take a look at some stocks that we may be interested in watching. But before we do, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list, which you can view by going to the push-button stocktrading.com homepage and clicking on blogs, then daily spreadsheet, and then clicking on the link. Depending on the operating system you're running, you may need to click on a dialog box to open the spreadsheet. Once the spreadsheet's open, you simply go down to the Universal Watch List tab, click on the tab, and that will bring up our Universal Watch List. To qualify for our Universal Watch List, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria, and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our universal watch list. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted, the first stock on our watch list is Fleetmatics. Fleetmatics Group is an Ireland-based developer of web-based and mobile fleet management software for small and medium-sized businesses. The stock is currently tracing this second stage cup and handle base with a buy point of $47.96. Fleetmatics gets a 72% checklist rating and can be bought on a break above $47.96, keeping in mind that we are on a don't buy signal in the market. Before we buy this, we would want to see the market go to a buy signal. Fleetmatics should be bought on a break above the 47.96 pivot point on at least 140% of average daily volume when the market goes back to a buy signal. Next, we have Ulta Salon Cosmetics and Fragrances. Ulta operates 774 beauty stores in 47 states offering hair care, cosmetics, and other products, as well as salon services. The stock right now is in a second stage flat base with a pivot point of 159.85. It gets a 64% checklist rating. Ulta can be bought on a break above 159.85 when the market goes back to a buy signal, if we get at least 140% of average daily volume. Also, aggressive traders could draw in this trend line and buy on a break of that trend line. Norwegian Cruise Line Holdings operates a cruise line servicing North America, Europe, Central and South America, and the Caribbean. The stock right now is in this second stage base with a pivot point of $57.55. It gets a 72% checklist rating. Norwegian can be bought on a break above its pivot point at 57.55 on at least 140% of average daily volume when the market goes back to a buy signal. Aggressive traders can buy this trend line for a little bit of an early entry. Arista Networks provides cloud networking software and hardware for internet and cloud service providers and next-generation data centers. The stock has been putting in this long-term cup with handle base with a pivot point of $88.56. Stock gets an 80% checklist rating, which is a very high rating. It's a first stage base. I really like this stock. Arista Networks can be bought on a break above the pivot point at 88.56 on at least 140% of average daily volume when the market goes back to a buy signal. Comfort System USA provides ventilation, air conditioning services to U.S. commercial, industrial, and institutional markets. The stock cleared this first stage cup and handle base. Back in late March and has marched steadily higher since then. Right now, it's putting in this little consolidation, and we have this little downtrend right here. Comfort Systems gets a 64% checklist rating and can be bought on a break of this trend line by very aggressive traders, keeping in mind that we are on a don't buy signal in the market. And finally, Gray Television owns and operates television stations in 44 television markets, broadcasting 140 programming streams. The stock recently broke out of this second stage base in the $14.80 area. Gets a 76% checklist rating. We have put in this downtrend, and very aggressive traders can buy Gray Networks on a break above that trend line, keeping in mind that we are on a don't buy signal in the market right now. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.